what tariffs do, I think, is going to accelerate that trend that we've already seen happening, which is central banks diversifying away from the US dollar and replacing it with physical gold.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for January 27th through February 3rd, 2025, while supplies last. This week, backdated 1-ounce silver Austrian Philharmonics are just $2.85 over spot, one of the lowest prices we've had on a sovereign coin in years. Next, AU pre-1933 $20 gold St. Gaudens coins are just $50 over melt. We also have 90% constitutional silver or junk silver at just $1.69 over spot per ounce. We also have the 1/10 ounce UK Gold Britannia coin at just $29.99 over melt. And finally, 1-ounce gold Canadian maples are just $59 over spot. Again, one of the lowest prices we've had on gold sovereign coins in years. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And with us today, a new guest and friend of Peter Grandich. We really appreciate Peter Grandich connecting us with Michael Gentile. He has 20 years experience in the investment management sector and now is an active strategic investor in the metals and mining sector. Michael, thank you so much for joining us today.
My pleasure. Great to be here.
Well, it's great to have you today. I did want to have kind of talk about gold making new all-time highs this morning as we record this on Monday, February 3rd. Your perspective on what's happening right now, it seems like the markets might be a bit spooked about Trump announcing new tariffs.
Yeah, there's a lot of very busy morning, a lot of cross currents, a lot of people asking what's the impact on my sector, this sector, that sector on tariffs. I mean, the first question you got to ask yourself is how lasting and enduring are these tariffs going to be? I think just 2 seconds ago, I saw the headline that he may be pausing tariffs on Mexico for a month based on the discussions they had on the border and immigration. So we don't know how long lasting they're going to be. So the comments I'll make, Elijah, will be based on if the tariffs are to persist and are more enduring in a couple of weeks. Here's some of the the cross currents, in particular for the gold sector. It's just why you've got me on the call today to talk about. I'd say in general, tariffs will be negative for growth. So global growth in general will slow and it'll pick up inflation. So goods get more expensive when you put tariffs in place and GDP will be lower. So what that means is you probably have lower interest rates than you otherwise would have with higher inflation. And what that means is real rates will go more negative, which is actually very positive for gold. When you have higher inflation and lower economic growth or lower interest rates, that's a very positive backdrop for gold. So I think at a high level, quite positive for gold. The other more subtle one, which is really, I think, even more impactful, is what's been driving gold prices the last 4 or 5 years, which has not been the typical investor, hedge fund, institutional investor, retail demand. It's really been central bank buying or de-dollarization. And that's for multiple reasons. Kind of concerned about the U.S. balance sheet fiscal deficits and the value of the U.S. as a reserve currency going forward. What tariffs do, I think, is going to accelerate that trend that we've already seen happening, which is central banks diversifying away from the US dollar and replacing it with physical gold. Because, I mentioned I'm Canadian, unfortunately, so we're under the tariffs as well. But if you're putting tariffs up 25% on one of your best allies and best friends, what are you going to do to your enemies, right? And so I think if you're a country that is had been in opposition to the US in the past or been in the crosshairs of US difficulty in the past, I think you're going to be much more motivated even now today to further accelerate that trade away from US dollars into gold. So whether tariffs endure or not, that's one thing. But this move today, I think, is going to accelerate that trend of out of US dollars into gold, which has been driving a lot of the gold price increase the last 3-4 months. So from a high level, as a gold investor, I'm very happy as a Canadian to have my concerns today about our economy with the tariffs on it. But from backdrop for gold, very positive. The only negative I see right now is the US dollar strength. If tariffs are maintained, you're going to see FX weakness, likely in the countries that have tariffs imposed on them. So the US dollar will be strong, which will put somewhat of a cap on gold prices because it becomes more expensive in other currencies to buy gold. That being said, gold and Canadian dollars today is well through $4,100 Canadian an ounce because our currency has depreciated so much versus the US dollar. If you look back to 2021, like the last time gold hit like 2000, it's around $2,600 to $2,700 Canadian. So gold in Canadian dollars is like 50% or more higher than its previous all-time high. And investors don't realize that if you're investing in a Canadian miner or a Mexican miner or an Australian miner where the currencies are depreciating, the margins are expanding dramatically faster than you would even see by looking at the US gold price. And I look that is well appreciated either. So there's a lot of positive today for gold investors. And the sector, as you know, is still lagging quite a bit versus other pockets of the market and remains extremely undervalued. So hopefully this news today is another log on the fire to increase investor interest and potentially the valuations of these companies.
You mentioned de-dollarization and countries moving away from the dollar, moving into gold. Now, it's interesting because Trump has also talked about how, if the BRICS nations continue to move away from the US dollar as the world reserve currency, then he would slap 100% tariffs as retaliation. So it seems like the situation might kind of spin out of control in some regard there with respect to tariffs, and then that causing de-dollarization and so on.
Yeah, you can't. Trump's a master negotiator. I think he's very good at look at the progress he made in the Mexican immigration and border situation in about 6 hours today. Like he'll throw something out there and then he'll walk it back and he'll end up getting a result that's advantageous for him as a negotiator. So, you can't, and I'll stay out of the politics, but you can't drive countries, into de-dollarization by putting tariffs and at the same time saying I'm going to slap a 100% tariff on top of you. At a certain point, what markets hate, Elijah, more than anything is uncertainty. You think about business backdrop. If I'm an American, do I invest in new manufacturing capacity in the US? Are tariffs going to last 2 weeks, 3 months, or 30 years? Like, what am I going to make that investment in Canada now? Or I make that. So what tariffs do, or what uncertainty does, that create a freeze on all investment. That's just a negative for growth. And Trump is a pro-growth president. He wants to see the economy grow. So at a certain point, I think he'll find that equilibrium where he gets the concessions that he wants for America out of these countries. We use unfair trading deals that he has in place in these countries. Once he does that, I think constantly bringing up the threat of more tariffs will be very counterproductive to global investment and harmful to global growth. But we'll see what happens. But I think he's smart in that. I think he'll end up getting the deals he wants or getting the most he can out of each situation. And then hopefully a period of stability will ensure that we can have growth. But if we have instability, that's bad for markets, but it's typically very good for gold, because that's people will typically flee to gold in times of uncertainty and instability in the global economy.
Do you see this mainly having economic impacts, or do you see it could have greater geopolitical conflicts could arise based on this? It seems like during Trump's first term, no major wars broke out. Do you see there being a possibility of things escalating because of tariffs, or mainly just an economic war?
Mainly an economic war. And like I said, I think geopolitics is very complicated. It's hard to pinpoint, and that's not an area of my expertise. So I'll stop talking after this comment because I don't want to get over my skis here. But I would say, we didn't have a lot of geopolitical conflict or any wars in the Trump's first term, because I think there was the bad actors in the world had a sense that if they stepped out of line, the punishment would be swift and decisive. I think the tariffs, putting tariffs on some of your best trading partners. If I was a country thinking about getting out of line or starting a geopolitical conflict in an area that you'd be opposed to the US, I would think twice about both the economic and military retribution that would come their way. So I would expect that actually to de-escalate. We've already seen it de-escalate a little bit since Trump won and come into office. I think it's going to be purely an economic war. Now, if countries get desperate economically, economic desperation like we saw in World War II does lead, that's multiple years away, right? So that's why I said I think Trump's going to want to have fairer trade deals, more advantageous trade deals to the US. But I don't think his game plan would be to push the rest of the world into a state of chaos, economic chaos, because that can lead to certain parties or certain viewpoints politically in certain countries springing up that are negative for geopolitical stability and peace. But again, we're getting ahead of ourselves. It's hour 6 of tariffs that may last a week or may last longer. We'll have to see. But there's multiple paths. But again, that creates uncertainty, right? And then that is not good for business investment, and we'll likely see a strong bid under gold. So people feel comfortable that the world has settled down and is more predictable than it has been the last few weeks.
Turning back to the metals sector, we're seeing all-time highs for gold. We're seeing silver move as well today. But the junior mining stocks, as gold has hit all-time highs, a lot of people have been disappointed regarding the performance of these stocks. Your perspective on that, and when do you think people may get payday for holding these mining stocks?
Yeah, so there's been kind of a checklist that I've been going through, Elijah, and I said this before. Like, I have not seen a commodity. I've been doing commodity investing for 25 years. I've never seen a commodity make new all-time highs consistently as gold has in the last, let's say, 6 to 12 months. And the level of apathy or disinterest from investors. Usually when a commodity is making new all-time highs, there's a mass inflow of capital and interest. And YouTube channels are talking about it, investors are talking about it, retail investors are engaged in the sector. That has not yet happened in the gold sector. And the question we ask ourselves, well, what's happened? If you look back to the last run the gold stocks had, kind of 2020, 2021 during the COVID period, gold price went from 1,600 to about 2,000. The market was in a difficult period and gold stocks did really well. Many juniors went up 5, 10, 15 times their money in a very short period of time. And because the expectation was, well, gold prices go up, the balance sheets of the producing companies will do really well because their margin should go up, their cash flows should increase. What happened from 2020 to 2021 was the gold price went up $4 an ounce, but the cost, the all-in sustaining cost of the average gold producer went up by $4 an ounce or more. It was a hyperinflationary period, and the companies did not do a good job controlling their costs. So the margins did not expand at all from gold going from 1,600 to 2,000. So the financials came out a few quarters later. Investors were like, hey, let's see how much more money these gold companies are making. The answer was they weren't making more money. In many cases, they were losing or making less than they were before. And so investors got quite, I think, disillusioned with the sector. And then gold kind of grinded sideways from 2021, 22 until about last year. And then in 2024, the gold price took off again. What happened this time is gold gone from 1,800 to 2,800. It's about a $1,000 move in the gold price. But inflation's been much more subdued in this period because of the central bank buying that we've been seeing. The gold price has been marching higher. Yet the costs of the average producing company have increased, but much slower percentages in the gold price. And so in Q3, you saw some really nice financial results in the vast majority of gold producing companies. You're going to see some spectacular results in Q4. I think Q1 is going to be even better than Q4. And so you're going to start to see real margin inflection, real cash flow growth, real earnings growth in these companies. And that will attract the attention of the average generalist investor who can invest in any sector and goes, well, I can buy tech, I can buy real estate, I can buy banks, but wow, look at this sector here. It's got the best growth, the best balance sheets, the best free cash flow yield of any sector in the market. I should pay attention to gold. The other thing I've been waiting for that. So that's a big checkbox. We didn't have that in 2021. We have that now structurally, dramatically improving fundamentals for gold producers, which is great. What we have not yet resolved is there's speculative money or the money in the market. The market's been so good. The S&P has been fantastic the last 2 or 3 years. The tech stocks have been even better than the S&P. The Mag 7, AI stocks like NVIDIA, meme coins for crypto. So it's been so easy for investors to buy speculative, I would call expensive, market leading stocks and make 30, 40% in a year, kind of close your eyes and go to sleep. It's been too easy to make money in these corners of the market. Therefore, investors don't feel any pressure or any need to rotate out of those tech kind of speculative investments into gold. And that'll only happen when the stocks start to underperform. So last week we had the DeepSeek AI kind of fear that hammered a lot of AI stocks. So it's kind of a wake-up call for a lot of investors. Hey, you can lose money in these stocks as well. This week we have tariffs creating even more uncertainty. And what's the one sector that's not affected by DeepSeek AI or tariffs? The gold sector is relatively unaffected by that. Well, the fundamentals remain intact. Business investment being, we talked about earlier, right? Economic uncertainty, tariffs create uncertainty, which means slower economic investment or lack of investment. That's going to affect the vast majority of sectors in the S&P 500, not gold. So this uncertainty, this slowing of performance should create fund flows out of the general market into gold. And as you know, actually, our sector is very, very small. There's very small market cap for all gold producers globally. A little bit of money shifting out of tech into gold or out of the S&P 500 into gold will have massive implications for the stock prices. And I said the fundamentals justify it, right? This is not a fear trade. This is a fundamental trade with a slowing of that market dynamic. And if you look year to date, GDX, GDXJ are silently outperforming the S&P and the NASDAQ. So we're starting to see the gold stocks outperform. And that in itself will create a more attention or more fund flows out. So the last piece we need, long answer, but the last piece we need is fund flows. I think all the stage is set for that. And the tariff news today is kind of the cherry on the sundae in terms of encouraging that rotation out of mainstream stocks into the gold sector. So I'm pretty confident and quite excited about what 25 has in store for us. The long ride, I've been patient. I've been patiently waiting for this moment to come, but the stage is set for a really nice rally here.
You mentioned how in 2021, we saw inflation along with the rise in gold prices. So, the producers didn't really make more money. This time, it seems like inflation has not risen as, gold has outperformed inflation so that, the gold producers can make more money. Now, I've talked to different people. For example, Tavi Costa, Cresci Capital, is saying that there's multiple waves of inflation, and we could be seeing more inflation in the coming years, and we could kind of be in the second inflation wave. Back in the 70s, that's what we saw. I think 3 waves of inflation. Do you have any concern that gold going forward, maybe this year, won't outperform inflation, or do you think it'll continue to rise more than the cost of production for these miners?
Yeah, I mean, I'll give you just a concrete example. Don't quote me these numbers; they're broad and they're probably wrong by $100 an ounce. But Agnico Eagle's is a top mining company in Canada, one of the top mining companies in the world, right? So if you look in 2020, their all-in sustaining costs might have been $1,000 to $1,100 an ounce, and gold was $1,600, so it's still nicely profitable. Gold went from $1,600 to $2,000. Their all-sustaining cost went from $1,100 to, let's say, $1,400 an ounce. So they got a bit of margin. Maybe $100. Gold went up by $400, and their cost went up by $300. If you look today, gold's gone from $1,800 to $2,800, and their all-sustaining cost might have gone from $1,350 to $1,400 or $1,450, but you got $1,000 more per ounce. So their margins today are probably well over $1,000 to $1,400 ounce US per ounce. That is very dramatic. And Agnico is one of the best run companies in the world. But even the producers that are less well run or have rising costs, even if their costs are $1,600 or $1,700, you get the math that the margin expansion is dramatic, right? So the disappointment was inflation is typically, and Tavi will tell you this, inflation is typically very good for gold stocks. But what happened in 2021, because it was a mix of cost inflation and probably operational underinvestment from previous cycles for mining companies, their costs were 1-to-1 with inflation. Where typically inflation will be 10%, maybe mining companies will have 8% inflation. They're getting a bit of margin, and the gold price keep marching higher, and their margins are protected from inflation. Unlike other producers, other commodity, other sectors of the market where inflation can damage your margins. Like your margins will actually be contracting because your costs are pushing higher, and you can't keep passing it on to the consumer because they can't afford to pay it. So I don't think inflation is a bad thing at all for the sector. And I think the margins we're seeing now have not been priced in. And if margins can just keep up with inflation, the gold will be a fantastic group to be involved in as an inflationary cycle hits. There's a period of time here where there's a massive cash flow trade that has to happen, where the producers have to start reflecting the margins they're actually making. And the other thing I say too is inflation, I think Tavi's on board with this too, is that if we have rising inflation, which we very well could have in the future, the balance sheets of the governments globally do not have the capacity to rise rates to offset inflation. What's going to end up happening is you might have 5, 6, 7% inflation, but they can only raise rates by 1 or 2%. And that goes back to our previous discussion, which is that means negative real rates, which will turbocharge the gold price. So I think we have limited ability at the G7 country level, the Western economies, to raise rates to fight off inflation. So if we do see a pickup inflation, I think it'd be very positive for gold as well, because you cannot see a scenario where the US could afford 8 or 9, 10% interest rates on its debt. The US would be technically insolvent at that level. So if inflation does pick up, I would view it as positive for gold, and the margins will be likely protected or enduring from these levels today.
Your perspective on also how it seems like the gold sector is so small, right? I mean, the amount of people invested in gold versus, as you mentioned, the AI stocks or the S&P 500 is just, it's minuscule. So as things start to shift, if we do see a pullback in AI stocks in the main in the general stock market, and we just see a small percentage of investors move into the gold sectors, it seems like the increases could be really explosive. The stocks could really, the increases could really be explosive going into that sector.
Absolutely. If you look at the DeepSeek Monday, the AI panic that they had, I think NVIDIA lost 600 billion to 700 billion of market cap in one day. That's just the market cap that got shaved off NVIDIA's market cap. That's not their market cap. If you look at the largest gold producers in the world, you could have bought all of Agnico, all of Barrick, all of Newmont, all of Rio Tinto, all of BHP, and more with just the market cap that was lost by NVIDIA. Just to give you an example, one company lost more market cap than probably the 10 largest miners in the world in a day. Their whole company. So yeah, if 10% of NVIDIA's market cap rotated out of NVIDIA into the gold sector, these stocks, the big stocks would have to be up 50 to 100% each. The small juniors would be up 5, 10, 15 times. And we've seen that happen before. So it's a very small sector, but it's a very important sector. In terms of the reserve currency status of gold and the value of gold on the balance sheet of central banks and the value of gold as money. So in my opinion, it won't take much, Elijah, for the market to have a dramatic re-rating higher, capital rotates out, and I think the settings are in place to see that happen.
So going forward then, what is your perspective on I guess everyone's portfolio is going to be different, right? But when it comes to, investing just in gold itself and also investing in the juniors or the big mining companies, your perspective on kind of the things that people should consider when jumping into the sector here.
Sure. I mean, physical gold will protect and preserve your wealth. So if you want to, let's say a certain lifestyle, I mean, it's a great examples of like a bar of gold and Roman times, baccio Roman toga, or an ounce of gold, whatever it would be. And today it'll buy you a nice suit, so it gives you the same, a nice piece of clothing from Roman century to today is the same ounce of gold coin would do that for you, right? So if you want to preserve your wealth, if you're at a level where you're like, I'm very comfortable, my wealth is more than I need to survive, and you're worried about some of these de-dollarization things, you just want to preserve your purchasing power infinitely, you could put a large percent of your money in physical gold. Kind of close your eyes. Don't worry about the gyrations day to day or week to week or month to month. There'll be periods where it does well or not. But 50 years from now, if you can buy a nice house, a nice car, a nice wardrobe, whatever money you have today, you put that in gold. 50 years from now, you should be able to change that gold to whatever the currency is at that time and be able to purchase for yourself the similar goods at that time in history. So that's kind of gold preserves your wealth. Then if you want to kind of go up the risk curve and say, okay, I want to make more, I want to increase my status or my level of financial level of life, then what you would do then is you want to move down to producers and say, okay, well, if I buy a producer, like I said earlier, if my costs are $1,600 and the gold price is $1,800, I'm making $200 an ounce margins, and all of a sudden gold is $2,800 and my costs are only $1,700. Now I'm making $1,100 margins. Well, $1,100 is more than 5 times bigger than 200, which means your profitability is exploding higher. So in theory, the gold producer stocks should do much better than the gold price in a rising gold price environment when margins are expanding. That's how you can add, leverage or make more than the gold appreciation. That's why investors have been so frustrated, because they haven't seen that margin expansion the last time gold moved in 2021. So that's step 2. If you want to get really aggressive, which is what I do, which is not recommended for everybody, it's not investment advice, but you go down to the junior exploration companies who are trading at, $5, $10 an ounce or $15 or $30 an ounce in the ground. And gold price in Canadian dollars, for example, goes from 2,000 to 4,000. Well, if you can buy gold at $10 an ounce in the ground and it's trading at 4,000, that means you have $3,990 Canadian of margin to exploit that gold, build the facilities to produce it, and sell it at $4,000 an ounce. So the margins you can make by buying ounces in the ground, and that gold going from $10 an ounce to $100 an ounce, let's say, that's 10 times your money. And at $100 an ounce valuation, there's still $3,900 an ounce of margin for the producer to buy. So the healthier the producers get, the more money they're making, the more the gold price goes up, the more quality projects with gold in the ground become valuable, and that's torque, that's leverage. So they're different type investments for different objectives. Understanding that junior mining investing, the risk of loss is very, very high. Producers will have volatility up and down, and gold will be the most stable. But depending on how bullish you are and how much you're willing to lose or how much you're willing to speculate, that'd be kind of the 3 buckets of risk into that parameter, how you can invest in gold. But in general, the goal to do a great job preserving your wealth. And that's why it's been money for thousands of years. And that's why central banks are reestablishing it, I think, on their balance sheets as a store of wealth as they lose confidence in the sustainability of paper money going forward.
And if our viewers are interested in learning more, where can they find you online?
Yes, I don't have a YouTube channel. I keep a pretty low social media profile. I can look my name up on YouTube. I try to do one of these every month or so on different platforms just to share my views of what I'm thinking, what I'm investing in, how I'm doing it. But that's the best place to find me. Just Google me on YouTube and you'll find shows like yourself where you can hear what I'm talking about.
Well, we really appreciate your time today, Michael. We'll put a link in the description of this video, maybe to, playlist of some of the interviews that you've done. But I guess before I let you go, are there any key takeaways that you think the viewers should really consider when looking at the gold sector today?
I mean, I'd say do your homework. I think, as you can tell by my tone, I have been and remain extremely excited about the prospect for the sector. That doesn't mean you can just go out and buy any gold stock and you're going to make money. So I'd say educate yourself. People like yourself are actually doing a great job helping investors learn, people that do this for a living every day, to how to invest, what their approach would be. I'd also say if you're going to start investing in this sector, either buy physical gold, which is pretty easy, one decision, you buy it and you own it. If you're going to start buying stocks, you want to own a diversified portfolio, in my view. There is a lot of volatility inherent in the mining business. And so if you just buy one name, things can happen. Geopolitical event, an earthquake or something happens, a political unrest. So you'd want to own more than one name in your portfolio, kind of diversify your portfolio. If you believe in this theme, you believe in the opportunity, I would spread your investments over multiple names so you have a diversified portfolio. And also just be patient, right? There's volatility and it's not a sector where you're going to make money, tomorrow. You got to have a bit of a longer term view. It's a great entry point. I'm quite confident the next several years are going to be very positive for gold investors, but you have to have patience and staying power in investing to be successful as well.
Fantastic. Michael, once again, thank you so much for your time today, and God bless.
My pleasure. Thank you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for January 27th through February 3rd, 2025, while supplies last. This week, backdated 1-ounce silver Austrian Philharmonics are just $2.85 over spot, one of the lowest prices we've had on a sovereign coin in years. Next, AU pre-1933 $20 gold St. Gaudens coins are just $50 over melt. We also have 90% constitutional silver or junk silver at just $1.69 over spot per ounce. We also have the 1/10 ounce UK Gold Britannia coin at just $29.99 over melt. And finally, 1-ounce gold Canadian maples are just $59 over spot. Again, one of the lowest prices we've had on gold sovereign coins in years. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.